The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania, where we are broadcasting live today. Remember, folks, we have our good friend Norm Winsky is going to be our guest tomorrow. We have a very, very special day coming up here on August the 11th when we have the solar eclipse and the new moon. But boys and girls, ladies and gentlemen, it's even more important than that. On that day, on August the 11th, you're not going to believe this, but Philip Mitchell Luck is going to be 5 years old. If you want to send some expensive presents, send them here to 100 South Broad Street, Philadelphia, Pennsylvania. And don't forget to send some on May the 19th when his 7-year-old brother will have his birthday also. So let's get started with the markets. We're going to take a look here at Deutsche Bank. And the reason why I want to bring this up, folks, is because Deutsche Bank tells you a little bit about technical analysis. If you look what happened here in January of last year when they offered to bring the stock out with a 20% discount. What a great deal that was for everybody. You can see where it went. It went all the way down to under or almost $10 a share, $10.30 a share. And then if you'll notice at the very bottom there, that was the day that the Federal Reserve came out and warned everybody how dangerous it was to own Deutsche Bank. And what did it do? It rallied 25%. So the news follows the trend. It's the same thing in everything that we look at. It doesn't make any difference which vehicle, which stock you're looking at. They all act the same way. Now, the way we're going to prove that to you is we're going to take a look at a stock that's really in the news, and that is we're going to take a look at Tesla here, if the old cowboy can find it, and I believe it's right here. We're going to take a look at Tesla, and you'll be able to see this, and you're going to watch the same thing happening. We have a situation now where Elon Musk wants to supposedly wants to bring the stock private, which means the shorts are going to be stuck possibly. But you'll notice that Tesla has just completed a giant ABCD pattern, and we're already trading $25 under the price of the D point. So that's pretty much completed that pattern. So pay attention to that, because if we get above that 390 level in Tesla, there could be some real legs in this all the way up to that 420 buyout price. Now, I'm not involved in this stock at all, and I don't do any stock trading. Most of the stuff that we do is foreign exchange and the futures markets, but this one's in the news. The reason why we're bringing it to your attention is because the news does follow the trend, and this is what you're watching in all the markets. We've seen a lot of negative news about tariffs. We've seen a lot of negative news about all the things that are happening with terrorism across the world, and yet the markets still keep going higher. And the reason is there are more buyers than sellers. That's what technical analysis is all about. If prices are going higher, prices go up. People are buying. If prices are going lower, people are selling. It's that simple. So trade what you see, not what you believe. Now, the one thing that I would like to mention today is that we do have some other guests coming on next week. We're going to have our good friend Bill Meridian. We're going to have Hema Reddy come on from the Skinny and the E-Mini. We're also going to have Kyle Cooper, who's been on CNBC and also Bloomberg this week, as well as Dennis Gartman. So we've got some really high-powered guests coming in next week. So I think if you tune in, you'll be pleasantly surprised to see what these folks are saying about the market. And everybody has an opinion, including yourself. But remember, you're the one that has to take the responsibility for your own actions. And that's the key, to investing. Focus on how much money you have at risk, not how much money, someone can tell you how much you're going to make, whether it's your broker that tells you that you can make another $50 in Tesla if they buy it out at $420. Well, they have to have funding to buy out at $420 a share, and that's a lot of money, folks. And whether somebody ponies up to the bar with that much money, we'll have to wait and see. if that in fact is going to be the case. But let's take a quick look at the gold market here. The gold market has so far held that really strong support level at that Fibonacci level at 1210. That goes back to December of last year. It certainly hasn't moved up very much. We're only up $10 from the bottom, which isn't very much at all. But we have this really strong cycle coming in here on Friday and Saturday. Of course, is the solar eclipse with the new moon, but it'll start coming into effect most probably on Friday, and the effects of it will most probably be shown on Monday as we come in, and we should have a really active day Monday. As you recall, when Norm was on last time, he talked to us about the fact that quite a few of these planets are in retrograde motion, which could cause some big problems as far as volatility. And we had Stan Harley on yesterday, and Stan talked to us about the fact that he was looking for a high to come in on Wednesday, as was Norm. So this is a very interesting time, to be looking at the markets. And if we take a look at the one chart that we follow the most, which is the chart of the New York Stock Exchange Index, we'll get this up here so that we can take a quick look at it and let everybody see it here, because it really gives you a really strong description of what we're looking at here, and you'll be able to see this. As you can see, we've completed that ABCD pattern, and we had a very, very quiet day yesterday, a down day. We're going to be probably slightly higher to unchanged today in the market, given where we are right now, but it hasn't broken out to the upside. But anytime, if we would get a strong move of more than 150 points in the Dow Jones Industrial, either today or tomorrow, I would think this pattern would be highly suspect, because the timing on this really doesn't have much band of air, folks. It's just got so many things that says it should be right over this time frame. The problem that we have is we're looking at this beautiful eclipse that's coming out here on Saturday, and of course being a new moon, and it's going to be a super new moon, and so it's going to be very, very powerful, and that could be, maybe it's going to hold off until Monday. Remember, there's a high probability if you're up all week and you come into a Friday, it's very difficult for the market to make a big reversal. So maybe it's best, to wait till Monday to see how the action unfolds, because many of these patterns that we're looking at, that we've been talking about here for, the past 7 or 8 days or longer, 7 or 8 days or longer, are certainly completing. We're seeing that in the NASDAQ, we're seeing it in the Russell 2000, we're seeing it in the S&P 500. Just all of them are all making, ABCD patterns, which is the main pattern that we look at as we're watching these things, and along with the cycles, and the cycles are doing pretty much the same thing. But remember, these markets have a tendency to go up on bad news, and when that happens, boy, that's a very, very powerful market, because markets that go up on bad news, I mean, there's nothing holding them back. The same thing if the market has really good news and it goes down, I mean, that's another bad sign. So let's keep in mind and listen not so much what the news is happening, but watch what the charts are trying to tell us. Now, one question that we've had from one of our listeners is about the stock of General Electric. Folks, General Electric is just in a tight trading range here between 14 and 12, I guess, and I don't see any long-term probabilities of a really great moves and anything like that. If you want to watch something for a larger move, look at something that's got some type of a potential, like in silver. We have a really strong potential to bottom here at around $15.10. Gold around $1,200. Those have some really good long-term probabilities, whereas General Electric is really a flat market that's gone from 69, all the way down to 11. Maybe it bounces back to 16 or 17, but there's not much potential there compared to what's on. And remember, focus on how much money you have to risk, not how much money you're trying to make.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back, and what we want to do is to try to take a look at the British pound here on the long-term weekly chart. We've been watching this for a very long time. We are setting right at the 61% retracement on the long-term weekly chart down here at 128.80. The low so far has been 128.55. We're going to be really, really hard pressed to get it to rally here, I would believe, until Monday. And the reason why is we're looking at some of these cycles that we've already talked about today. But this is going to be really key support level. Failing this, you know, you'd be looking at another 350 pips to the downside. And remember, if Brexit fails or something goes dramatically wrong, you know, we could easily go down and test that level of 111 that we've seen before. Excuse me, 117 that we've seen before. So this is at a really critical level here. We're really trying to hold here in the British pound. The $64 question is whether it's going to. This is a situation when you're ready to trade is how much do you have to risk to see if you're right or not. And as we suggested, at the most in the British pound would be about 50 pips. We've not seen a signal yet that would tell us that we're ready to move, but it's getting very, very close. What we're watching is to see how it hovers around this Fibonacci level at 128.80. We're a little below that right now. We'd like to see it get above that, and once we get above it, we would think that it has a really strong probability of completing the bottom, and then we know that our risk factor is very, very small. What's good about it is the profit factor on this would be at least 4 times the number of pips that you're risking. So you're risking around $300 to make $1,200, and that's why it looks so very interesting. Now, the next chart that we want to talk about, we've had 3 or 4 emails about this morning, and that is the chart of Bitcoin. And folks, it's not about cryptocurrencies, what we're looking at here. What we're looking at is blockchain technology. That's basically the internet squared. The way it was explained to me by my good friend John Jameson, who knows more about this than anybody I've ever met, is that if you're looking at these little Russian dolls where there's one doll smaller than another one, larger than another one, larger than another one, and they're all lined up like that, that's what you're looking at with blockchain technology. With the internet, you're only looking at one Russian doll. But with blockchain technology, you're going to see the internet squared, and that's where the real potential lies. I don't understand it, to say the least. That is the understatement of the year. But from what I'm understanding from people like John Jameson and a few other people that I listen to, that tells us this could be the future. So we're looking at it. It doesn't appear to me, by looking at this chart that we're looking at with Bitcoin, that it is a chart like the tulip bulb mania from the 16th century, folks. It doesn't look that same way. And the reason why is, if you study the long-term chart of Bitcoin going back to, basically, 7-8 years ago in 2010, when it first started to get a little bit of action, you'll notice that it's had, if you go back and look at it long-term, you'll notice that it's had 4 major corrections. And what I mean by major, better than 78.6 corrections in the past 7 years. And we're in one of those right now. That level would take us down to right at $3,800 per share. That would be the large ABCD pattern that we're looking at here on this chart, where we topped around 19,000 when it started to be listed at the Mercantile Exchange right around the end of the year. In fact, it was, I believe, the last week of last year when it became listed at the CME. That's another reason to take a look at this, is the open interest has not really gone up dramatically at the CME. There's been not nearly as much activity as we would think. And part of that, I believe, is the fact that the price of stock came out at 19,000. It's still at 6,300. So that's way beyond the person's usual budget. So as these things become more ETF regulated and things like this, I think you're going to see more and more people. But I don't believe it is a bubble like we had with the South Sea Island bubble and the Florida land bubble, and some of those things that we've seen before. Remember, in 2000, the NASDAQ dropped 87%, folks, down into 2002. And look where it is now. I mean, it's 27% higher than it was in 2000. So these things, have a tremendous volatility. So we're watching this. We've not bought anything in any of these cryptocurrencies. We're just looking at them because it could be the future, and so we are watching it to keep an eye on what's going on. And believe me, I use other sources to try to understand what's happening, because it is far beyond this old cowboy's pay grade. It's really high technical stuff, but the charts we can see, and that's what we're watching here, is the fundamentals of what are exposed here on the Bitcoin chart. Now, we have another question here. Since we're talking about foreign currency, we want to look just to take a little bit of look here at this U.S. dollar index, because we mentioned that this past week where we're going to be in this trading range, which we've certainly been in. We've been as high as 95.55 this week, and I believe there's a possibility here that we're going to be chopping around here for another few days before we finally break out of this to the downside. Now, there's news this morning, of course, from J.P. Morgan. Of course, they might have an ulterior motive. You never know about that. But they're saying that there's a possibility that Donald J. Trump wants to make the dollar weaker in order to work with these tariffs a little bit more vociferously. In other words, to make it more difficult on some of our partners. But we don't know about that. Those are things that are just put in the news. Follow the charts, folks. If prices are going up, there's more buyers. If prices are going down, there's more sellers. That's what the news is telling you. And believe me, there's one thing that people will do to you. They'll give you bad information. They'll lie to you. They'll even try to cheat you if they can. But the one thing they cannot do is they cannot hide from you. So if you're a technician, you look at the chart. If prices are going up, there's more buyers. Prices are going down, there's more sellers. And you always have the probability and the possibility of changing your opinion if you're wrong. And that's what trading is all about, is understanding when you've made that mistake and correct it just as soon as you possibly can. The difference between a professional trader and the neophyte, beginning trader, is that the neophyte will sit there and pray and hope that things will turn him around. He won't do anything to correct himself. And believe me, you're the only person that can correct it, folks, can correct your errors. No one else is going to help you. So you've got to do it yourself. Take responsibility. You take all the money, so you have to take the responsibility. So keep that in mind, that it's the responsibility of what you're doing when you're trading that makes it worthwhile and gives you the freedom to do the things that you really would like to do. Now, we had a question about one other stock that is in the news all the time, and that is Apple Computer. It's now a $1 trillion company. In fact, it's $1 trillion and $1 billion and change, so it's on its way to $2 trillion. Folks, there is no topping pattern that I can see here in Apple. Once we went above $200 a share, it became very, very emotional. We had tremendous volume. When it hit $1 trillion a share, it stayed above there like it didn't even exist. So people are willing to pay at this particular level. Until we see a pattern that tells us that there's something that would make the price of Apple go down, I do not see it in the charts right now. It could go a great deal higher. Stop and think what we've done in the stock market, since, Donald J. Trump was elected president. They thought the end of the world was going to happen and would be in another depression, and the market has gone from, I believe, 18,000 in the Dow that we were in that night. The Dow was down the most it's ever been on a point basis, 880 points on that night, and of course it ended the night being up on the day and has been going up ever since, and that's been almost 2 years. So there's nothing in the news that tells you that these markets are not going to go any place but up. It doesn't make any difference whether it's war or tariffs or anything else. The market wants to go higher, so we're going to be watching it closely, but we're going to take a break now and pay a few bills. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to continue on this U.S. dollar that we were talking about, and we'll switch over to the euro versus U.S. dollar, which is 53% of the value of the dollar index. As you can see here on the euro chart, we've made some type of a double bottom down around this 115 level. We've rallied up as high as almost 118, so we've been in a really tight trading range for about 6 weeks. We just saw that on the previous chart of the US dollar index between 95.5 and 93. We're seeing the same thing. To me, on a technical basis, this is extremely important, folks, because any breakout of the euro to the downside below 115 would signal somewhere between 111 and 108, which would be a huge move. And also would mean on the upside that the US dollar would be skyrocketing. From a technical basis, it looks like the dollar is getting ready to weaken and the euro is getting ready to rally. Now, that is my opinion from looking at the charts. It has nothing to do with the fundamentals, but we've seen this from a long-term perspective that the euro has a great deal of support at that 114, 115 level, but anything below that will be extremely negative. Stop and think of it this way, folks. We've been here for well over 2.5 months, and we've been in a really tight trading range. That means that buyers and sellers are not the same fellas. Someone's trying to make a big play here, but no one has the power to make it move yet. Someone is going to have to call uncle pretty soon, and we're going to find that out when the euro moves above 117.50 or the US dollar breaks below 93. That would be the signal to say, yes, something really dramatically has happened. If you remember, the first time we hit 20,000 in the stock market, it was a big thing. Of course, the market, stayed there for a little bit and then backed off, but it was the second time that the Dow Jones went above 20,000 that was very, very important. And that's what we're looking at in the same thing with the currencies right now. We've already looked at the British pound today. We've seen that, the importance of what we're looking at right here. We could go through all of them. I don't want to spend a lot of the whole time on foreign exchange here because we've got a few other things that I think are pretty important to talk about. But this is one thing that we're really focusing on each day when we send out the videos following the euro. And the euro is such a high correlation to gold. We watch that very closely too. So those are the things that make money move. When we try to follow the money, that's where things are really going. But right now, people are still putting money into the stock market. We've not seen any indication. We've got a lot of ABCD patterns in the E-mini S&P, the Dow Jones, and also even in the NASDAQ. So there's a lot of things that saying we could be in a topping area, but right now we've gone through some major resistance on the upside, which means there's a lot of people still interested in buying. And as well they should, because the trend has still been higher. Now, the one thing that I wanted to remind you of is that we do have Norm Winsky coming on tomorrow, and then we have several other fun guests next week, which will be a lot of fun to bring on. We're going to have our good friend Bill Meridian from Vienna, Austria, from Cycles Research, and Hema Reddy, and Kyle Cooper is an energy specialist, and then also we're going to have Dennis Gartman, time permitting. So that'll be a fun week that we're also looking at. Now, I had one other question that I'd like to answer from one of our listeners, and that is about the wheat market. We're seeing some pretty big moves here in the wheat. I want to get the Christmas wheat up here so you folks will be able to see it. And there we go. We'll get it up here right now. And we have a major report tomorrow. I believe it's the last major report before the crop comes in for the USDA, so that'll be something really big. That'll come out around 10 o'clock tomorrow, Chicago time. The market will still be trading, so we'll see a little bit of that on Monday, of course. It'll be after the show that we have tomorrow, but it's going to be interesting to see. Now, these markets have rallied strongly off of the triple bottom that we had in some of these things. We had a beautiful three-drive pattern in corn, and beautiful three-drive pattern in soybeans. They both rallied dramatically and have held up extremely well. We're still trading, above $9 a bushel now in the in November soybeans. Remember, they got as low as $8.26 a bushel, and they rallied well, just about $1 a bushel. Corn's rallied well over 50 cents. So this is a strong sign that some demand is starting to come in. I know that every day I get a question about tariffs and what does it mean. And believe me, folks, pay close attention when I try to tell you this. I have no idea what these tariffs mean. The good part of it is I don't think anybody else does either, because you can watch Bloomberg or Financial News Network or even Tiger TV. You're going to get people calling in, and everybody's got a different opinion. And believe me, opinions can be changed very easily. So I do not know the answer to that. I'm a technician. I look at the charts. Right now, it's telling me that doesn't seem like it makes very much difference economically because the markets are acting extremely positive. I mean, it doesn't make any difference. Even stop and think of this, folks. Just 9 months ago, we were almost ready to go to nuclear war with North Korea because they were firing rockets over Japan and Guam. And now there's no more rockets, and you know the market was still going up even during the time that there was supposed to be a war. So just because someone says it's going to happen, you know, be really skeptical of that. A perfect example of that is what's happened with J.P. Morgan today, saying that they believe that Donald J. Trump is going to weaken the dollar. Well, maybe he's going to, but he's going to have to do it through the eyes of the Federal Reserve, and we're going to find out if that's true or not. So pay attention to what the charts are doing and not what people are talking about, and that includes me too, because I have an opinion, but my opinion is based on what I see technically. The fundamentals have always been a mystery, so watch what's happening with the charts. Those are the things that will be, you know, very, very important. Right now, the market's acting. We're still up on the day. We've got the Dow Jones up. We've got the S&P up. We've got the Russell up. Gold's actually doing okay. Silver's doing okay, the euro's doing okay, so there's no really panicking in the world anywhere. We're not seeing anything near a panic. Now, someday we might have a crash, but if you wait for a crash to come, folks, you know, the last major crash we had was way back in 1987 on October the 19th. But believe me, you could see that one coming on the 12th of October because the market had started down dramatically. And when it closed that October the 16th, it was certainly telegraphing that you didn't want to be long stocks that coming Monday morning. And that's when the proverbial, you know what, hit the fan. And anyway, what was that? It was the major bottom opportunity of the 1980s. That low on 1987 on October the 20th, the day after the crash, that low was an exact 0.618 retracement when the Dow hit 1666, I believe. The previous high had been 2850, and we were down 16% in one day. Can you imagine 16% on a value of 25,000? We'll be down over 4,000 points in the Dow in one day, boys and girls. Those are not the type of things that you like to see happen to financial markets. That one happened to be a major bottom. And believe me, it was a major bottom because we went from 1666 all the way up to 25,000 and change, and we're still going up. So just remember to watch the charts and see what's going on. Don't pay too much attention to what you're hearing in the news because a lot of it might be made up. We don't know for sure. Now, someone's asked a question about the grain markets and this report that's coming out. This is a USDA report that gives you roughly what the crop conditions are going into harvest because the corn crop is pretty well made. The only thing that would hurt it would be a freeze, which it doesn't look like it's going to happen in September this year, but we'll wait and see. We're going to take a little break. We're going to get back and we want to talk a little bit about the crude oil market because that market is making a major move here and we could be at some serious support.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We're going to talk about crude oil here. As you can see from the chart that we were looking at this week when we did the newsletter, we were looking for lower prices. As you can see, there are 4 key levels based on previous price action that pointing towards $65 per barrel in crude. Now, we're down about $2 a barrel from where we were last Monday. We're trading around 67 and change. That's another $2 lower from where we are now, is where the major support came in. I believe it's right around 65.40 is the exact number that we're looking at. And as you can see by looking at this chart, we have 3 major areas that are just spot on at that level. So that should be really interesting level to watch. Now, the $64 question again, is it going to make it or not? I don't know, but neither does anybody else. All I do know is that if we get above $70 a barrel, this pattern would have changed and the breakout would be to the upside. Now, given the fact that there's all kinds of problems with Saudi Arabia and Canada and the Iran sanctions and stuff like that, there's enough stuff in the news to make oil go either up or down. So you roll the dice and pick which one you want to roll with. But right now the charts are saying that we're still in a downtrend, corrective mode, down to that 65.40 level. That's a very important level based on the technical analysis of what we're looking at. And basically we're watching what previous swings are doing, what's happened in the past, and moving it out into the future. And we know that the markets do repeat over and over again, and that's what we're trying to do, is to follow that repetition. If we look at this from a standpoint of what gasoline futures are doing, and this is the time of the year when gasoline futures should be really smoking, folks, because that is their most bullish time of the year during June, July, and August. And as you can see, this market's been down for well over a month and topped, several months ago, so it's not following the seasonal nature. This means that we could be looking at another 3 or 4% drop in the price, as much as 5% drop in the price of gasoline here, because if we break below this 119.90 level, this is going to be a very negative spot to be trying to buy gasoline, because it would give us a target down around 192. So that would be an interesting one, to look at also. But remember, these are based on chart patterns. It has nothing to do with the fundamentals. The fundamentals follow the market. The technicals are where the buyers and sellers are really putting their money into the market, and that's where the real key lies. Follow the money, because if they're buying, prices go up. If they're selling, prices are going down. That's the thing that you really want to keep an eye on. We've had another question about the silver market. During the break here, someone asked a question about why I feel so strongly about the silver market. I want to give you this daily silver chart. You're going to be able to see it here, I think, relatively easy. And someone just mentioned about deflation in here in the Tiger Den, which is a great place to go for information, folks. If you're trading and you're looking for ideas, the TFNN's Tiger Den that they have here at TFN is a great place. Really smart people in there that give you some good ideas. And they're mentioning deflation because, you know, if these commodities like sugar and cocoa and hogs and some of these other things don't turn up from here, we're going to be looking at some pretty serious deflation. I know when you go to the supermarket, you're not seeing it, but believe me, these will filter down. You can see from this chart on silver, you have several ABCD patterns that measure to 1510. We've been as low as 1527. Now, that's not very far away from 1510, and the fact that we have this solar eclipse and new moon with perigee, which means the Earth is as close to the moon that you get, whereas strong earthquakes usually happen, and we just had a monster on the other side of this at the full moon when we had apogee. So we're seeing some, you know, pretty dramatic things happen. These are really big ones, folks. Our good friend Norm Winsky has pointed this out to us, as our friend Tim Boss did 2 weeks ago. He talked about the importance of these eclipses that we had during July and then the one we're having here in August. So we want to keep an eye on these because they do have some really strong things. That reminds me, we need to have our good friend Al Larson, and he's always great to have on, and he'll be really good, from Money Tide, which talks about the moon, which will be a lot of fun. But we'll be watching this cycle. Monday when we come in, of course, the eclipse will be history, and we'll be able to see if there's any great volatility coming in here. We got the volatility index trading a little below 11, but remember the low in that volatility index was 883. We got as high as 50, then we backed off to pretty much where we are right now. We've been down, you know, quietly for what, 5 or 6 weeks now, and whether it's going to hold that level or not, we'll have to wait. So we had a big drop in the volatility index this week, but you know, it's still at strong support level. Considering where the stock market is, you'd think that the volatility index would be somewhere around 3, and yet we're trading almost at 11. So it's going to be very interesting. If we get any weakness in the stock market at all, you'd be looking at that volatility index to perk up. And believe me, I think volatility is going to be the name of the game here the last part of this year. I think it raised its head earlier in the year, back in January, and I think we're going January, February, and I think we're going to start seeing it raise its head again also. Whether this is related to anything that's happening with the reserve banks of any of the countries, I am not sure. I'm just looking at the charts saying that these are the types. Look what's happening to the stock market today, folks. There's absolutely, yesterday and today and the day before, virtually no volatility at all. So the buyers and sellers are fighting it out. I mean, well, the buyers are still the winner, but there's no big volatility in the market at all. If you want volatility, you have to go, you know, to the crude oil market or to Tesla or something like that, Twitter, you know, to get some Facebook, you know, some of these things. But, you know, the stock market is basically very, very quiet. We had our good friend Arch Crawford on this week, and he showed us the advanced decline line, as did Stan Harley. And Arch was on Monday, Stan was on Wednesday, and they showed us that the advanced decline line was not acting very bullish. The number of new highs to new lows in the stock market is not acting bullish, yet the market still goes higher. So you can't fight that trend. Just keep an idea that we're in an area where we could be topping, but, you know, with these ABCD patterns, when they fail, they can go a lot farther than you ever thought. Remember what happened on election night? The market was supposed to, you know, tank into the sewer, and look what happened. It went from down 800 points in the Dow Jones, and by the time we woke up on Wednesday morning on November the 9th, the market was already up, and it never looked back. So just remember that the news follows the trend, and keep an eye on what those prices are doing. One other question that someone has brought to our attention via an email last night was the amount of margin that is available for trading and how they handle that. Folks, if you trade foreign exchange, the foreign exchange banks that you deal with set their margin requirements themselves. If you're dealing with futures at the Chicago Mercantile Exchange, that is set for you. Usually it's at 5%. So if you're trading a $100,000 contract, your margin on that, they usually are going to charge you about 20%. So you're going to put up about $22,000, excuse me, 10%. They're going to put up 10% of the value of that as your margin. So that's how they do that. With a foreign exchange bank, they can give you 100 to 1, 400 to 1 is the most I've ever heard. But believe me, margin can be your deadly enemy, because if you're wrong, you're going to lose all your money very fast. So try not to leverage yourself at the very most 20 to 1. And that gives you, you know, a really good place where you can actually put your stops in and prepare yourself against possible loss. That's the real key, you know, to what we're watching here. So we're going to take a little break and come back and finish up the show. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I have to, being here at TFNN, you really have some really smart people, and one of them just emailed me to tell me, don't forget to tell the folks what happened to the Swiss when they disavowed the euro a few years ago, when the contracts dropped $25,000 against you in a matter of seconds. Of course, it rallied back, but it was the biggest bank robbery ever perpetrated on the public, and nobody did anything. So there is risk involved with this, so make sure that you do that. Even putting a stop in sometime does not protect you, but 99% of the time that it will. But it was very important that our good friend Tom told us to, not Tom O'Brien, but Tom was nice enough to email us to tell us that there is a huge risk. That is a very rare event that's happened. I've only seen it twice in my 55 years of trading, once with the Mexican peso back in '76, and I was not involved with the one that happened several years ago. But it can happen. It should have been illegal. People should have gone to jail, but they didn't. But that's the way it goes. Folks, the chart that I posted in here is what I think is the most important chart, showing the four major ABCD patterns, the E-mini S&P, all measuring up to this 2850 level. We're trading at 2858 right now. We have some, pretty strong cycles coming in this week and again on Monday, but we'll have to watch it very closely. Make sure that you protect yourself at all times. No one else is going to help you except yourself, and you're the one that takes responsibility for it. That's why we have freedom in these markets, is because you do have to take that responsibility. You are the one that decides whether you make it in this business or not. Nobody else. And just keep that in mind. And that's the most important thing, is to follow what your risk is at all times. Don't worry about how much money you're going to make. Focus on how much money you're going to risk, because that'll keep you in the game. That's a thing that is by far the most important. We're watching this U.S. dollar because that's going to be the key to some of these markets, in our opinion. So live every day in an attitude of gratitude, and may God bless. And don't forget, April the 11th is Mitchell's birthday. May God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!